With mortgage rates creeping higher, homeowners are increasingly opting to stay put, leaving less existing homes up for grabs here. That's great news for home builders with demand on the rise. Home builder sentiment hit 50 in May, marking the fifth straight month of gains and the first reading of builder sentiment since July that wasn't negative. So in our latest installment of our week-long series, Real Estate, the New Reality, we're asking, are home builder stocks a good buy, or should investors say goodbye? Joining us now with his picks, we've got John Lovallo, UBS, U.S. Homebuilders Building Products Equity Research Analyst. Love your title. Love you, John. Thanks for joining the program here today. So,
thanks for having me, guys.
Walk us through some of the home builder stocks that you're keeping an eye on right now, even in this environment.
Yeah, so we like the group at large, to be honest with you. We're really focused more on the entry-level first-time builders. So that would be a D.R. Horton and a Meritage Homes, for instance. But it's a very interesting dynamic that's in the market right now. There's very little existing home supply, as you alluded to, 2.8 months of existing home supply. The supply that's out there is old, and it's generally at price points that the first-time buyer is not interested in. On the flip side of the coin, you have the private builders, which are 60% of the market, many of which are having problems getting land, getting labor, getting materials, and now getting financing. So while demand has certainly slowed, the demand that is out there is all being kind of channeled towards these public home builders that, oh, by the way, can offer financing. So no one's paying 7% out there. They're paying 6%. They're paying 5.5%. So it's a really, really interesting opportunity for market share gains.
At the same time, John, aren't the publicly traded home builders still grappling with supply issues, labor issues, that part of the challenge?
100%. I mean, supply chains are still not back to where they need to be. Build cycles are elongated. Materials, depending on the day, the materials are still hard to come by. Right now, it's transformers. So getting the communities actually electrified is the biggest hiccup. And, I would even say go as far back as, the actual development and entitlement of the land, getting land actually zoned and ready to be built upon, and then ultimately, built upon is taking a lot longer than it has historically. So the whole process is, delayed relative to how it's been in the past.
And so what should buyers expect with that still lingering in the home purchasing process now?
I think the market is still pretty competitive. And so, on the existing home side, as I mentioned, there's just not much out there. So I think buyers that are looking for a home at this point are probably more inclined today than at any point in history to have to focus on a new home. And so, that is what this dynamic is sort of what's keeping home prices from falling. They've actually been very, very resilient, which is a good thing for the overall home market and for the home builders in general. But it's a competitive market for sure.
One of the things that we've talked about regularly when it comes to new home construction is finding places to put them, right? Buying the land, getting the zoning, et cetera, et cetera. And I know that This is highly regional, so it's difficult to make sort of a national generalization. But what kinds of trends are we seeing there, especially given the tight supply? Have we seen sort of a loosening of the willingness to get these things built?
It's a great question. I mean, I think in certain markets, as you mentioned, it is a very market by market dynamic. In certain markets, it is easier. Texas and the markets throughout Texas is a great example of, a kind of a builder friendly environment. The same would be in Florida. And I think this is really important because if you think about a couple things, one, kind of the flow of migration trends into kind of the Sunbelt states. That's where all the job growth is. That's where a lot of people are moving, for the weather and for just kind of a different type of lifestyle, not to mention jobs. The first time buyer that's going into these markets is generally a little bit more willing to make concessions, meaning that they'll move a little further away from the city, right? They'll buy a smaller footprint. These are the things that sort of help the math pencil in a market that is really a challenge from an affordability standpoint. So I think to your point, you're seeing, at least for the public home builders that we cover, you're seeing very little sort of infill building. You're seeing them move out sort of to on the periphery of markets where there's open space and where they can develop these very large communities. And by the way, help the math pencil for the home buyer.
Yeah, no, that's spot on. So where does this sit right now for the newest kind of cohort of home buyers and entrance into the home markets. I'm speaking about millennials, especially as there are now more millennial home owners than there are those who don't own homes. And I'm now in the minority, I suppose, as that's kind of flipped on its head here. So are we going to expect to see a steady movement, a steady trickle of more millennial homeowners into homes if we continue to see some moderation perhaps on price, even though we're still looking at a broader rate environment where that means that the home is going to be more expensive over time?
Yeah, we think so, right? I think to your point, this millennial buyer is reaching sort of prime home buying age, so call it 30 to 35 years old, and having life events. They're getting married, they're having children, things that by definition necessitate more space. And, we've certainly gone through a very bumpy market over the past 15 years or so, but the allure of home ownership has really not lost its luster. And it is still sort of that American dream. And people want to move into homes, and they're going to do what they can to make that happen. We're also in the midst of probably the largest generational wealth transfer in the history of the country, which is helping some of these first-time buyers make down payments, make the affordability equation a little bit more palatable. So yes, the simple answer is that millennials and future generations are still going to want to buy homes, and they're out there right now looking pretty intently to do so.
John, let's bring it back to investors. Do you like all the home builders? Are there ones that you think are going to do particularly well in this environment?
So we think the group at large is well positioned, the public home builders that we cover, for the market share dynamics that I had mentioned. But to your question, D.R. Horton and Meritage Homes are kind of entry-level, first-time focused home builders. We think that that's sort of where the juice in the market really still is. And that goes back to the need-based buyer element that we just spoke to, and the fact that there are a lot of folks that are reaching this prime home buying age. So those are the two that we would kind of point to as being, in our view at least, best positioned from a price point standpoint. And then in terms of geographic footprint, most of the builders, as we previously discussed, are in those kind of sunshine states. So from a footprint standpoint, also very well positioned.
All right. Our thanks to John Lovallo, who is the UBS U.S. Homebuilders Building Products Equity Research Analyst. John, great to speak with you today.
Thanks for having me.